Just recently, Amazon announced a 20-to-1 stock split. What does that mean for you? Should you buy Amazon stock right now because they are splitting their stock and doing a $10 billion buyback? We're going to get into all of that and more on this video and why it's not as rosy of a news piece as you might expect. First off, every investor in Amazon stock will get 19 additional shares for every share that they own. On top of that, though, the price per share is going to be reduced by 20. So you're not increasing your value of your holdings at all. It's like taking a whole pizza and putting 20 slices into it. It's still a whole pizza. You haven't increased its value at all. Now, some people will say, but it's so much easier to buy shares now when they cut it into 20. No, not really, because in a day and age where we have fractional shares that you can buy, it's really just making you feel good about yourself that you have one share of something. Who cares? Because in the end, the return isn't based on how many shares you own, but how much money you have allocated to it. So whether or not it's one share at $2,900 or 20 shares at just over $140 a share, it doesn't matter, because in the end, it's the same amount of money. So the return is going to be the same. So don't get too crazy about this. Now, on the stock buyback, $10 billion sounds really good. But remember, back in 2016, they did a $5 billion buyback as well. 6 years later, they've only purchased $2.1 billion worth of that buyback. That means they haven't even finished half of it yet in over 6 years. And this new $10 billion buyback is simply replacing the $5 billion buyback. So in reality, they're only buying another $5 billion of stock. Now, about this $10 billion share buyback program that they just announced as well. Sounds exciting on the surface, but it only amounts to 0.67% of the overall market cap of the stock. Very small. Plus, they announced a buyback program of $5 billion back in 2016, and they've only purchased $2.1 billion of that $5 billion over a 6-year period. And all this new buyback program is going to do is replace the old one. So while they've purchased $2.1 billion, they're only going to be adding another $7.9 billion to that, or the entire program is only increasing by another $5 billion. So this is not a monumental move. In fact, in the grand scheme of things, they're only buying back an additional 0.5% of the entire stock's market cap. So should we expect the stock to go up after the split? It's going to depend on the overall market conditions. If the market's selling off like what we've seen so far here in January, February, and March of this year, then no. I mean, look at Google. Google announced a price split. What have they done since? They initially popped higher, just like Amazon did. But then after that, it has continuously sold off ever since. In fact, marked a high in the stock when they made the announcement. So chasing these stock splits is a crazy idea, because in the end, you're not getting a lot of reward for what you're risking to go after a price move that you somehow think makes it more affordable for traders. And on the original buyback plan, they were only buying back about $350 million on average per year. And that equates to about 320 shares a day, or $958,000 over a 6-year period. And they've given themselves enough flexibility in this new buyback program to buy it back opportunistically to enhance shareholder value. That means they're going to pick and choose when they do it. It's not going to be all at once. And there's a good chance that if it took them 6 years to buy back $2.1 billion, maybe it takes them like 15 or 20 years to buy back this $10 billion. I don't know what it's going to be, but I'm just assuming, based off of past history, they are going to probably be very slow at doing so. And if the stock pulls back significantly, which that's what I think that Amazon is assuming here, is that because of overall market conditions with the rising interest rates and the war in Ukraine with Russia, that they themselves may not be that optimistic on the overall value of their stock. And so they're using this buyback program to buy it back at a significantly lower price. Now, enough talking, let's go and look at the charts here. But before I do that, make sure that you have pounded the like button and subscribe to this channel, because you're going to get all the notifications of when I do new videos all throughout the week. Plus, click the join button down below so that you can get all my stock market research each and every day. Now, on the charts, Amazon has been one of the most boring charts over the last 18 months. In fact, it goes all the way back to July of 2020, where it simply hasn't gone anywhere. You have this massive resistance level that it is currently struggling to disattach itself from. And on the upper end, you had a very large channel that it did manage to break out of twice, but quickly came back inside of that channel following that pop. So now we're at the bottom end of this band. We've tested it a couple of times. We've broken below it, come back above it. But for almost 2 years now, it's done nothing. So we get this 5.5% pop because they've announced a stock split and everybody's losing their mind over it. Now, you might get optimistic about the fact that they will be included in the Dow Jones Industrial Average. That's really the most irrelevant index that you can possibly be a part of because it is a price-weighted index and not a market cap-weighted index. That means a company like United Healthcare has the most influence on the index because its stock price is so high, followed by Home Depot and Goldman Sachs. Not Apple or Microsoft. In fact, they're right there in the middle of the pack. So Amazon being included in the Dow Jones really doesn't mean much to any serious trader because it's not a serious index to follow. It's what the corporate media wants to talk about, not what traders want to talk about. If you want to follow a good index, follow the S&P 500. That's the one that you should be focused on the most because that's the one that shows you the price action of the overall stock market in its truest form. Let's look at Google here. Again, this is the most recent price split that we've seen. What do you see here? A big, massive pop going all the way up to $3,000, just like Amazon. And what has it done ever since? It's done nothing but trend lower. In fact, it's more than 10% off of its all-time highs. So the takeaway in all this, am I optimistic about the Amazon stock split providing any value for shareholders? No. The buyback program sounds great on paper, but it's really a minimal buyback and with no timetable set to say, hey, we're going to do all this within a year. If they said, hey, we're going to do it within a year, that's a little bit more serious. But we don't know if they'll be done with this in 10 years. This is what I think is going on here. I think the people at Amazon, they know better than you or I how the economy looks. They're in it firsthand. The economy doesn't look good. The market's on the wrong side of the Fed. We have war raging in Eastern Europe. There's going to be interest rates going up. There's inflation going on at levels that we haven't seen in over 40 years. I think that they're trying to goose the price as much as possible so that they can get you, the retail trader, to buy up their shares so they can cash in without driving the price lower. Keep an eye out in the coming weeks and months ahead to see whether or not you see a lot of insiders starting to dump their stock on Amazon, because I think that's what's going to happen here. And I do not think that the stock split or the buyback program is a reason to believe that the Amazon stock will continue to rise or worth buying because of it. It hasn't done anything in 20 months with what we're seeing in the overall market. I have a very negative outlook on the stock, and I would not expect it to do what you saw with Apple and Tesla back in 2020 when they were announcing their stock splits, because those were completely different times. That was a time during very easy monetary policy in a market where everybody was stuck at home. There was no sporting events. People were wanting to trade. You don't see that as much now as you saw back then. So if you enjoyed this video, make sure that you pound the like button and subscribe, as well as hit the join button to see how you can get all of my stock market research delivered to you each and every day. If you have any questions, let me know down in the comments section. I'd love to hear what your thoughts are on Amazon. Thank you guys, and God bless.